Welcome to Everything is Fintech, folks. My name is Zach Anderson, Pettit, VP of Fintech Strategy at Money2020, and you're probably sitting there listening, watching, wondering, what is Everything is Fintech? Well, it's where we here at Money2020 explore, debate, and dive deep on the concept of quote-unquote fintech, as it were, and how it has and will continue to evolve in the world of financial services and beyond. We are now a fully global brand, so this show will cover the perspective from the Far East all the way through us Westerners sitting here in the United States. We will cover everything from technology to policy to regulation and beyond. We are going to have some fun on this global financial ecosystem journey. It's the nerdiest thing I think I've ever said, but we're going to have some fun, and you will see in this first episode that we have a good time. So, without further ado, our predictions for 2025 from the Money2020 team. Welcome to Everything is Fintech. My name is Zach Anderson, Pettit, VP of Fintech Strategy here at Money2020. But here at Money2020, we have a number of fintech talkers, a number of experts, a number of folks that have spent years in the industry, and we get to nerd out on it together all the time, but you actually get a behind-the-scenes look into it today. We have 4 other individuals. That's right, a total of 5 of us. It's before 8 a.m. in Kansas City, and we're doing math, folks, but I won't be the one to introduce them. Let's go ahead and put a name and at least a time zone to these individuals so you have a sense of who they are. Scarlett Sieber, who are you? Where are you? Tell us what time it is where you're at. Clearly leaning into the global nature of our team here.
Sure. Well, you said who I am. I'm Scarlett. Hi, and I'm in New York, living the New York life.
I love it. I love it. You're right. This is maybe redundant, but we're going to make sure that people know who people are. And second, but not least, it's early here, like I said. Cheryl Chen, who are you and where are you?
I am Cheryl. I am currently in Japan. It's 10:30 p.m. I am this close to rolling on the floor and falling asleep, but usually I am based in Singapore.
I love it. I love it. You're bringing the energy, none the less.
Woo, energy.
That's the faking of the energy that we love. She was bringing it, folks. All right, Ian Horn. I just said your name,
you
so
said
yeah.
my name, but it's still Ian Horn. I'm calling in from London. I have won the time zone lottery. It's 1:30 p.m. If I don't sound that excited, it's because I'm British. But if I do sound excited, then hey, we're doing something right. That's me.
There we go, baby. I love it. All right, last but not least, and because hosts eventually learn how to do things once they mess them up a number of times, I'll let the last one introduce himself without me saying his name for him. Who are you, mystery last guest? And where
Thank you for that. Thank you for that intro, Zach. First of all, I feel like the least having to follow Ian with that wonderful intro. I am Mickey Tasfaye. I am currently calling out of Nashville, Tennessee, which, as many of you know, is a very, very local expatriate haunting area for Brits, as Ian and I have come to know. That's where I'm calling from, Zach. 1 hour behind Scarlett and at the same time zone as you, but with a different accent.
Indeed. The level of international layers there cannot be unpacked in the time that we have. So let's...
I bet he's Ethiopian to the picture as well. So you get another layer on top of all the layers.
That's true. That's true. We are building a layer cake, not to be confused with a fintech layer cake, which is a wonderful podcast as well. Maybe a little bit of context now that everybody knows who you all are before we get into these specific predictions. Here at Money2020, like I said, we have a bunch of nerds that sit around and have conversations about fintech. We obviously have to spend a good amount of time analyzing what's happening in the market today, when then we have to do, I would say, very educated crystal ball gazing about what the future is going to hold. So there's always a conversation, should we do predictions, this, that, the other every year? And the inside baseball of it is that we actually had a conversation between the content team and the marketing team about 2 or 3 years ago. And someone asked, well, what do you think is going to happen next year? And I believe my exact response, it was the end of the year, it was pretty close to after Vegas, was, and I will say it with the F instead of the entire word, but who the F knows? And I think that most all of the predictions that you see in the world, we're going to see a lot of them coming out right as this comes out. The candid version of it is who the F knows. We're all guessing, right, at the end of the day. But we figured out, as a result of admitting to the fact that we don't know everything, that we can have some very interesting conversations about the things that we do know. So that's setting the stage a little bit. And the predictions from last year is where we're going to start, kind of slowing down for a second before we get into it. So that's the context. Mickey, you specifically had a prediction last year about funding. Cheryl, you did as well. Cheryl, yours was a little bit more about the private market. Mickey, yours was more about the public market. Mickey, I'm actually going to start with you. We're going to go public to private, which is maybe the reverse, but we'll see how it goes. And timing-wise, interestingly phrased, but the way that you put it, Mickey, last year was make IPOs great again. So, setting your feet to the fire, and I think we all know the answer already just based on the IPO market for 24. Were IPOs great again in 24?
No, they were not. I think that was it, right? I think like if you take yourself back to a year, 15 months back, right? There was like a very specific expectation, right? We'd been about 2 years into the start of like that really high inflationary period, something we hadn't seen for a long time. Valuations were cratering. There was a lot of uncertainty, political, geopolitical, economic, right? And so there was just a huge amount of expectation that 2024 would be the year where this huge pent-up demand for fintechs to go public would be the year that it would actually come to fruition, right? And my prediction actually was that 2024, the fintech IPO scene will transform into a thriller, I said, matter on the public markets. And we will go and ask ourselves, instead of asking ourselves, when is the next fintech IPO, we will ask, should fintech IPO? Now, when you frame it like that, I ask you, our wonderful host, our captain of the ship, how many IPOs of fintech can you refer from 2024?
Was there, it's early enough here that I feel like there's one that I'm missing, but was there one big one that I'm forgetting?
But that's the point, right? Precisely. Maybe that was one, maybe that was two, but what we not expecting?
Okay, yeah, we absolutely were.
Case.
We absolutely were. I really thought you were holding my feet to the fire and that I had just forgotten that there was like 14 IPOs happened and I had no recollection.
How could you not remember that?
Yeah, exactly. Well, I mean, to broadly quote Lynn Martin, I don't know if this is exactly how she said it at the show, but the president of the New York Stock Exchange basically said something along the lines of there's going to be a fintech spring, or there's going to be a fintech IPO spring. I just don't know when that's going to be, right? So I think to your point, Mickey, there's a lot of variables that play into this. And one of them is actually, Cheryl, one of the things that you had in your prediction last year, and we're going to find out if you were right or wrong next. The golden era of VCs may be over. Startups may have more capital options. So what's going on here? Mickey's telling me that there's no IPOs happening and the golden era of VCs is simultaneously over. Where's the capital coming from? Before we get to where the capital is coming from, actually, Cheryl, were you correct or incorrect in your prediction of the golden era of VCs being over?
Yes and no. Yes and no.
So it's non-committal.
Yes and no. I mean, like, this capital, if you are a good startup, right? Like, the VCs always say that good startups do not have to fear winter because people, right, regardless of like which asset class you're going to be, funding is going to chase good startups. So the very interesting thing is that, interesting for me, I guess, because prior to coming to Money 2020, I was doing fundraising at a VC firm, and then you could feel the winter. There was once we had, so it was a bunch of VCs at like this Singapore VC, like AGM. And then it was a beautiful venue too, overlooking like the field, Marina Bay Sands. And then everyone was just drinking in sad, almost like silence. Like, so how has fundraising been for you? It's tough, man, bro. It's so tough. Yeah, it's tough for me too. And then we were just like drinking, like, it's so tough. So the thing is that while that was happening, we were seeing a lot of capital outflows flowing out from China to Singapore, and then especially to Singapore, Southeast Asia maybe also, but primarily Singapore. And we were seeing a lot of family offices being established in Singapore. But while that was also being said, right, and so far the data that has come in is that family offices, especially these Chinese family offices, they aren't doing direct investments into VCs. But also you have your more traditional family offices who have always been in Southeast Asia, so they know the lay of the land. So what I did at the most recent Money 2020 Asia was I put a family office, I put a VC together, I moderated the session. So it's like, are VC still relevant? I think the exact session title was, Are VC Still Relevant? So I was just there fanning the flames. Like, so it was fun. It was very fun. Well, I mean, to VCs and their credit, right, they are very good connectors in the ecosystem. They know things because they screen thousands, hundreds of thousands of startups every year. They know their connectors, and that is so. What I always tell startups is that when you're looking for a VC in particular, make sure that what you're getting from them is not just capital, but also how can they help you beyond just capital. To be fair to VCs, yes, they are still very important in the ecosystem, but also do remember that if you're a startup, there's private equity, there are also family offices that do direct investments. There's also a secondary market. So yeah, it's a very long...
That goes back, Cheryl, to because a lot of the people on this virtual call are entrepreneurs or ex-entrepreneurs, probably recovering entrepreneurs is a better word to describe it. And I think one of the things about that is it really is about what you need the funds for, what type of business that you have, because in some cases you actually do just need the capital. That's more often than not the case, especially in the earlier stages, because you are leveraging from whether it be any of those, obviously from of the ones that you listed, whether it be PE or family offices or VCs. Like one of the advantages of VCs, especially the more active ones, is it validates your product to a market that, has notoriety there. As you said, if they have the expertise and network, they can open doors for you. Now, all of them can do this, of course, but that's kind of what they come for. And as you like, the other part of it, as you talked about, is really making sure that VCs, just like startups, have to think about what is their USP, what is the unique thing that they bring that someone else doesn't bring, because you can negotiate deal terms all day, but it really is about why that's the right partner, because it is a bit of a relationship, especially if they're getting involved earlier. And then just one other comment that I was going to say when you were talking about the family office piece in China and how that has changed a little bit too. The other thing that we're seeing from a global perspective is other geographies start to rise, and ultra high net worth individuals and families diversifying their portfolio in ways that they maybe had not historically done and starting to get more actively involved in tech. So we're certainly seeing that in places like the Middle East. And a lot of people, one of my closest friends just moved to the Middle East in the last 18 months because her husband got a job that they could not refuse. So she moved her family to the Middle East. So there are some other things that are happening like that as well. So in terms of the, VCs being dead, part of it is watching what else is happening from a geopolitical and macroeconomic perspective of the money is moving. The money's there. It's just where it's coming from is shifting a bit, I would say.
But isn't it, I think that there's something super interesting there. Two things that I think you touched on, Scarlett. One, with the VC thing, right? Sometimes people forget the portfolio impact, right? If you've got a VC and you've got 10 different companies, right? How complementary they are to each other, for instance, can become a huge differentiator versus money, right? Sometimes it's not about the money. Sometimes it's not about getting very far at external validation. It's kind of getting the validation that helps you get to the next point, and that might happen through who the portfolio companies are that your VC connects to. But I think the bigger thing about the VC thing is actually, it's not about VC in my opinion, but it's about the culture of VC, right? I think that has become the biggest thing that changed economies globally. Right? If you think back 20, 30 years to now, VC is a thing, but that's not limited to VCs, right? Anthropic has secured, 15 or 20 billion from Amazon in the last couple of years, right? In the very same model as VCs do. Remember when OpenAI got, 50% of OpenAI got bought by Microsoft for 10 billion or whatever it was 2 years ago, right? In a VC model. I think I read something like the percentage of jobs in the US created by VC-backed companies has grown by over 900% in the last 30 years in the US. and these VC-backed companies represent more than 50% of the GDP or the value of the S&P 500. So what it's saying is that like VC is not about the individual venture capitalist, but the culture of how we drive innovation and we fund innovation, right? It's family offices, it's culture and high net worth individuals, but it's about starting to take very risky bets in the model of VC, I thought.
Yeah, if I can jump off of that, Mickey, I think you make a really good point on the alignment of VC portfolios and people being invested in similar themes. On the family office side, I'm really intrigued to see what that means in terms of working with your investor and in terms of the pitch, right? Because family offices can sometimes be quite values-led. And I definitely saw a few years back a trend towards ESG and sustainability as wealth was being handed down generations in family offices. So I wonder how hands-on that group of investors are going to be and how that will impact life of founders. It could get very interesting.
That's a wonderful transition, my friend. You had a prediction. I'm just scrolling to make sure that it's 3 words. You'd think I could remember it. But speaking of interesting, your prediction, Ian Horn, from last year was that insurance would get interesting. And I think, one of the things we've been talking about here that Mickey even hit on was distribution. And, there's a lot of pieces to this, but insurance gets interesting. Did it?
Yeah, I think we could all agree that insurance was boring, right? It was boring. And I think if you ask anyone today, they would say it's not boring anymore. And I think that's all the evidence we need. And I think we can skip on one for one. Ian out. Thank you.
Why? Why do you think it went from being boring to boring?
Are we talking about news?
I am gonna have to hold my hands up and say I don't think it did. I think the opportunity long term is interesting. I thought people would act quicker. And do you know what? This was inspired by a session we had at Money 2020 Amsterdam this year, all about the black mirror of insurance. Also inspired by a friend of mine who's a health tech journalist. The more data we have, the more AI we have, the more we know about people, the better we can model risk. And I guess the concern with that is, insurance is based off of pooling. It's based out of, we don't know what's going to happen. So we all throw our money in and, insurance does its bit. If something bad happens, you're looked after. The insurers make their money, all good. I kind of wondered if we were moving towards a potentially dystopian future where we have a better idea of who you probably shouldn't insure, and how data modeling could really expand. And there's all sorts of other things as well, tech improvements, things like driverless cars. Like, how do you insure a driverless car? How do you know the ethics of what that car is going to do? How do you prepare against that? Who's liable? Stuff like that. So I still think the insurance space is open to all sorts of transformation. It's just the insurance industry doesn't seem to be too quick to change. And I think we will see development, but 2024 was not the year.
I have another question on that because it's a super interesting topic. And I know for us, we talk a lot about the opportunities within insurance because all the things you say are super accurate. What do you see as the biggest differentiators from traditional incumbents in financial services, like the banks versus insurance? Like, where do you see the biggest difference between who most, banks come big at our show? Like, where do you see the biggest differences between the banks and the insurers?
I think part of the challenge is that insurers see themselves sometimes as a different market, which is crazy because they need the banks to underwrite all the insurance. I think one of the challenges is that fintech, depends upon people trying to make nimble, agile, new ideas. And insurance and banking sometimes does not respond quickly to that and does not like that. We want definite outcomes. We want to know exactly what's going to happen. And I think fintech and insurance aren't necessarily comfortable bedfellows, right? I think it will take time. I think as AI improves, data improves, but I don't think insurers are going to rush into anything that's a gray area. And
you know what,
there we are.
Ian?
But yeah, go for it.
I think
Hit
you
me.
make an interesting point, but as many of you by now obviously know, the wider audience doesn't know, but I myself don't know how to drive a vehicle.
That's why you need a Tesla.
So I am actually quite uninsurable, but my partner is a driver. And recently, we're actually talking about this because she doesn't really care that much about fintech, right? But this is why I can tell you insurance is getting kind of sexy, kind of interesting, not for the everyday person, but on the back end, right? One of the things that she's mentioned a few times is she's had to brake kind of hard. And she's like, oh, damn, they're gonna like, cause it's linked to her phone app now that track. I don't know. That's pretty advanced, right? Like that Now we're starting to use data based on your driving to determine how much you're gonna get, what's your coverage, whatever.
Yeah.
I don't use insurance. I don't drive, so I don't know what the terms are, but you understand.
Mickey, the term is passenger princess.
Yes.
And don't worry, I'm also wonderful in my own way. It's fine. We can have a support group or something.
But I think insurance is a super interesting one, but the area that's super interesting is especially in climate. So your first point, Ian, around ESG, right?
Yeah.
And the thing about insurance is I think it just takes a long time for all of those changes to come through. But the data piece that you said is going to be super important now, because climate change means, and I'm not talking about 20 years, 30 years down the line, but climate change means every year, for instance, there's huge amounts of wildfires in California, or you have droughts. They actually affect real people, and they affect real people's premiums. There's a bunch of people in California that can actually not get insurance. I don't know how much you guys know about this. I just learned about this, but the state actually has created some type of, right? This is the piece that we're talking about that's going to get changed, and it's not going to be super exciting. And we talk a lot about like in day to day, but that's meaningfully exciting and meaningful ways of changing people's lives.
Yeah. So as I was saying right at the start, everyone agrees that insurance is interesting now.
There we go.
Totally. I think the hard part is that you just hit on. So if you look back at the world of fintech over the last like 12, 15 years, you can unpack so many different innovations, I think, that have driven, like where have all the overdraft fees gone? Where have, like trading fees? Like there's so many changes in the industry as a whole. I remember signing up for Root Insurance when they did what you're talking about, Mickey. Like this was a very unique thing that happened. And now like State Farm has it. And like I'm waiting for InsurTech's like second act. It was as if tracking through your phone just to say you're a better or a worse risk was the most groundbreaking thing that's ever going to happen. So after now after Root had that actual initial innovation of tracking your phone and saying, breaking too quickly, as you said earlier, Mickey, whatever it might be, that seems to have been the Cambrian explosion of insurtech innovation. And then like since then we've had that awkward silence that I just left in the moment, because it's just kind of, we've been looking around wondering. Scarlett and I actually in Singapore with a very high level individual from Prudential asked last week, why don't we hear the word insurtech anymore? And he kind of just said, I think just most of the insurance innovations happening inside of the big companies. I mean, that was a very like not exactly what he said, but sort of. So it's going to be interesting to see how this develops. And I think, distribution has a lot to do with that. And we're talking about big banks. We're talking about distribution. It's a very natural transition into Scarlett Sieber, the woman, the legend. I'm vamping because I'm scrolling to find her exact prediction from last year, which was that big banks will go big on embedded finance. I believe you sat on stage and had a conversation, at least part with JP Morgan about this last year. This has been a conversation that we've been having a lot. Did the big banks go big on embedded finance, Scarlett Sieber?
So first of all, the funny part about that is, to connect to the insurance thing, I was being a little bit like self-promotional, to be honest with you, because I spent a lot of time thinking about it and doing a lot of interviews.
Hold on. Did you write a book about it or something?
I kind of did. And there was, by the way, writing a book, Ian knows this, is not for the faint of heart. So it sounds like a really good idea till you do it. But anyways, one of the cool parts about that was we spent a lot of time thinking about this, and then there was a whole section on insurance. We talked about Root. We talked about all the things that Abby experiences, Mickey. So that was in there, and that was written a few years ago. So it's all happening. But to your question, I know Mickey has some opinions here, so I will let him chime in. I'm not going to go all about embedded finance because I think I need to just like step aside and focus on something else for a little bit because I'm a little tired of that in my brain. Did the banks go big? I mean,
also, what you just said, I think maybe the way the industry feels as a whole, like, I mean, it is like this. It's super exciting. Like, it's. I actually disagree with Mickey's next thing of where this is going, but I mean, I think we're all just kind of tired of saying the words, right? Like, it's just we talk about it so much.
We do, and there's a lot of different pieces of that, right? So, like, what happened with banking as a service, and some of the things that happen in the U.S. is,
right.
It's evolve, and with Synapse obviously caused a bit of a stir. We had some really interesting conversations about that on site with Yelena McWilliams, who was appointed trustee for that whole situation, whole bankruptcy situation. But then also, you talked about JPM 2 years ago. You obviously spoke with Matt for the global
Newkirchen, yep.
head of payments for JPM, and Sephora was on the stage, and so was the Golden State Warriors. So like embedded, those are not banking brands. So obviously embedded finance is happening, and there is some bigness going on. But obviously then we had Addie in there. We had my session with Green Dot and how Green Dot is reinventing themselves and doing more than just prepaid cards. So did the big banks go big? I mean, kinda, but I think, this is what I think. And I didn't prepare this because clearly this is coming live. But when a big bank goes big, it doesn't feel big because it's actually a long process to get to the big moment.
Mm-hmm.
So like, I think they will, but it's not going to be like they went big. It's like, yeah, we're seeing the steps to go in that direction.
Yeah. And to Ian's earlier point on insurance, I mean, potentially AI or potentially insurance is unsexy for the next 5 years, and then something comes out of some AI lab that none of us saw coming that changes the game completely. So yeah, agree completely. You can a very large, specifically the largest bank in the world outside of maybe the commercial Chinese banks, like sitting on stage talking with Sephora and, et cetera, et cetera. But we're talking a lot about payments in terms of embedded finance. And I think there's a lot of other pieces to it. I'm still bullish on the whole thing, but transitioning into 2025, one of our compatriots here, I think maybe, or at least in the first line of his prediction for the following year, is a little less bullish. Mickey, embedded finance is dead?
Well, I mean, I think we could, again, as you guys have already figured
Mickey,
out.
If I knew you were going to say that, I wouldn't have let you be the answer. God, okay, go ahead.
As you guys have figured out, I don't actually have very many original ideas. I just have things that happen to me that make me realize certain things. So I've been working from a co-working space recently in Nashville, and I went there on a Sunday to just do some work because money never sleeps, and you know how passionate I am about fintech. And I kid you not, I walked into the bathroom and NPR, they play NPR all the time.
Froze on that. So,
am I frozen? No. I'll start the whole story from the top. I go into the bathroom.
Go ahead.
They always play NPR at the bathroom of this. And when I walk in, they're talking about the Synapse involved collapse, right? Like 2 days, 3 days later on, Abby literally, while watching TV, asked me, hey, do you know about this thing called Synapse? I'm like, Synapse is a very, very small bank. It's like a tiny, tiny bank, right? Relative to like the number of thousands of banks that there are in the US. The fact that it's on NPR at that time, or the fact that Abby is talking to me about it, tells me of how big the collapse of embedded finance is. That's why I say embedded finance is dead, because what happened was huge. But it doesn't mean it's the end of embedded finance forever. It's the end of embedded finance 1.0. I think for good things to happen, for resilient systems to be reborn, right, we have to kind of realize some of the ugly truths that were laid bare by what happened. The reality is commoditized infrastructure with very poor value propositions, just purely renting bank licenses, is never going to transform financial services. If we thought it was, I'm sorry, we're kind of, drinking the Kool-Aid a bit too much. But this year, for instance, right, at the Vegas show, we just had the CFPB come and finally close the loop on 1033, right? Open banking is coming to the US in a very US style. No acronyms. We're going to go with the numbers 1033. And what's that? That's all about commoditized data, right? Embedded finance is commoditized infrastructure. Now, when you combine those with artificial intelligence, I think that might create embedded finance 2.0, or the start of that, where money is truly embedded, truly intelligent, and truly predictive. And I think that is the future.
The best part of that whole story was you told us as all this background about your co-working space, but really it was around going to the bathroom and NPR being on in the bathroom.
Hey,
that was the part that really, I was trying to get on the journey, and I'm like, how does that have to do with the co-working space? But
because it was at the co-working space. I mean, I don't listen to the radio.
I mean, it's fine. I get it. It's just a place that you frequent often, and then during your days, you get a lot of NPR.
It's all the all tying up. You see it. You see
There you
the
go.
vision.
We're here.
Mickey's version of shower thoughts is the bathroom at WeWork. But anyway, so I think that's an interesting point, though, right? Like to kind of bring it full circle a little bit in terms of the big banking piece. If we're getting to a point where maybe the early days of fintech were very garage band, right? I mean, that's like why I think a lot of us got into this, was very like, we're going to figure out how to pull apart the financial ecosystem in a way that makes a lot more sense for the world, right? And to Mickey's point, I would say that at points I drank that Kool-Aid too much. I mean, Scarlett wrote a book about it, so I'm not going to speak for her, but I think she's at least sipped it, right? Like this is a Kool-Aid we've all drank to a certain degree, right? I worked at a sponsor bank that was $billion in assets, doing deals with fintechs that ended up being much, much larger than that, right? And if you think about the way that a bank balance sheet works, how sustainable is that? When you take a step back, had we asked ourselves that, 5 years ago, I mean, I think we were asking ourselves that 5 years ago. It's just the broker deal, or the broker deposit rule was what it was. You could just send those deposits out. Anyways, we're getting into nuances. Point being, is this actually the moment that Scarlett's last year prediction really becomes true, right? The big banks going big on embedded finance. Like, it seems like in the same way that anytime something bad happens, there's a flight to safety and risk increases, there's a flight to safety in the world of embedded finance. So this is a question to everybody, but I mean, is this year or the next couple of years actually the year for the big banks to get in embedded finance?
Yes. I mean, I think that's a really great point, Zach, around the flight to safety. I think we're already seeing that, right? Like what happened with the first wave of these banking as a service players is they kind of created the market. They got people like to see the possibilities. Maybe they didn't do it so well, but that has created the demand. And then when they're like obviously struggling, some of the big players, like Stripe, for instance, is one of the players that's going really heavy into embedded finance. It's not a big bank, but it's, a vertical defining fintech, right? And to the earlier point around JPM, all of these companies are going into it. So the market is kind of already being created. We know the direction of travel. And we know these big players are saying, yeah, we think this is where the future is going to be. So we're investing heavily into it. So agreed.
Yeah, I think there's a really key point you made as well earlier, Mickey, which is that, embedded finance 1.0 is dead, but embedded finance isn't dead. And, something like Synapse as well, you look at that is a compliance error. The money still hasn't been found, is my understanding. It doesn't mean that
Not all of it.
Not all of it. Okay, yeah. It doesn't mean that the idea is broke. To relate to Scarlett here, I wrote a book a year or so back on DeFi, and I had all those conversations about, FTX just went bust. This is all over now, isn't it? But just because you get one kind of problem like that, a compliance issue like that, it does not mean that the idea is gone. I do think the challenge now is, my understanding is that fintechs are finding it harder to break into the embedded finance space now. New starters are finding it much harder to get into the market. So I think, as we've touched upon several times, banks don't move as quickly as we want them to, but they are moving. And I think maybe it's next year, maybe it's the year after, but I think that is when banks will go big. So I think Scarlett was right. It's just a matter of timing.
Isn't it always a matter of timing? So one of the things that you brought up, Ian, in your forthcoming prediction is, and as I just grabbed a jacket, I think this is a good transition, winter. And you phrased this in a very Game of Thrones joke way. So let me get through the whole thing. Winter, ... I mean, wealth tech is coming. So wealth tech is coming, but you had been watching Game of Thrones recently. Tell us more about why wealth tech is coming and why now, because I think this is, to the Money 2020 perspective, something we actually don't probably talk enough about, just because the world of payments and everything else in banking is changing so constantly that we don't, discuss this as much as we could at the show. But why is this the moment?
Yeah, I mean, first, I hope I can be Game of Thrones season 1 to 6 right now. If I'm anything less than that, then, shut me down. But this is very similar to the insurance point of the previous year. AI is transformative for wealth tech in many ways. I also think you see the rise of, people like Revolut entering the space, trying to be the everything app. There are a number of things here. So my background is wealth tech. I used to network with wealth managers and financial advisors. And when I first joined Money 2020, I was actually quite surprised by the lack of those brands that I was familiar with. at the show, because I think they should come again. They should learn more about what we're doing here. But there's massive stuff going on. So I don't know if it's next year. Again, it could be a timing thing, but there are big tailwinds for D2C. I mean, AI should allow banks and intermediaries to respond to client needs. I think open banking can add transparency too. The more we can see and understand people's money and potentially how their investments are performing, the more we can see when people are being underserved or served badly by their providers. And a lot of the kind of investment market and financial services on the personal finance side has traded in darkness and made the most of people not really understanding their finances or what to do next. So I think there's an interesting thing here. There's several things. One is institutional wealth. I think the investment tool is going to improve. You can also automate so many aspects of the asset management process. The actual outcome might be less sexy than we think. It might just be quicker transfer of assets. It might be cheaper asset management. But in the tokenization space, there's interesting movements there as well. I'm starting to see real estate move onto the blockchain. Again, quite nascent, but it will come. People are trying to do all sorts of things with alternative investments. I mean, at the moment, it's things like gold or it's things like wine. But I think give it time as people experiment with this, we'll see more and more things become accessible, first to institutions, but then also to individual investors. So I think that's a massive thing. And the other thing with AI and having the data of customers is the chance for banks to actually offer something. I don't think it goes as far as financial advice because robo-advice has had several kind of false starts. I'm not writing it off, but I don't think that's where the industry needs to go. But there are so many underserved people across the board. I think in the UK, it used to be that about 7% of people got financial advice. No one else did. And a large part of that was because banks moved out of the space because regulation made it too expensive to serve those customers. I now think with the technology we've got and the way that things are moving in, we can offer better services for more people. So that is, I think, a big thing.
Do we need to do I have the incorrect definition of wealth tech in my head, or do we need to redefine wealth tech somehow? Because everything that you just said is a lot broader than what I think of. What I think of is robo-advisors and is retirement planning, right? And when like a good portion of the world is struggling to maintain dollars in their savings account and they're just, trying to pay down that credit card bill or, whatever it is, to me, on Maslow's, fintech hierarchy of needs, the idea of like, helping someone's with their 401k, or, that's a very American version, but helping someone with, their work-based pension or whatever that ends up being in your world, that makes a lot of sense in terms of just, personal financial, just best practices. But what you're talking about is advice on a much kind of more personalized, lower level, not just relating to retirement, not just relating to investments, even just this is where your money should go. And this is how your decision should be made. It's about advice, not about retirement or about investment. Is that what you're saying? I think
it's combining all that information. Yeah. And actually it speaks to a point that I think Mickey was making, which is it's that embedded intelligence in what you're trying to build. People don't often know what to do with their money. They don't actually have a clue. Yep. But if we can bring information together and give people the right prompts, I think they'll make better decisions with their money. And there are other things as well.
Was a good name.
I wonder who came up with that. And Mickey, okay. Credit where it's due. Anyway, I think there are other hooks as well, like investment will get people interested in their savings and their investments. You look at GameStop, even something like that. If we can get more people downloading investment apps and so on, I think that leads to more engagement with investments. Some of it's cultural too. I mean, you mentioned the 401k. I lived in America for a year. People actually talk about their pension funds in the US, which is astounding to me. In the UK, we do not have that culture. In other parts of Europe, they don't as well. It's one of the reasons neobanks have been slower to take off in some parts of Europe as well, because people don't talk about their money like that. But I think there's a real opportunity there. And I think when we engage people through, again, it could be a meme stock, it could be crypto, or it could be just something better about their pension. It could be something sensible. But I think there's a real opportunity there to get people more engaged with their finances.
The cool thing about that too, though, is all this stuff, while it feels like it can be like specific segments or focuses, they all kind of come together. So on some of the points that you were talking about and where you went for a second, Zach, on the paycheck to paycheck, Matt Harris from Bain, there's lots of Matt Harris's actually, but the Bain Capital Harris, when he said this a number of times, but when him and I were speaking a few years ago, we were talking about, let's go back to payments for a second, but it will actually relate to your wealth tech point, Ian, where basically, especially for those who are living paycheck to paycheck or worse, like how and when they use their cards on what matters. So like this card would be the best to give you percentage points off here, or if you use this card, you get X, Y, or Z discount. And like you think about it, basically, why are we, the humans, having to think which is the right thing? Like there should be computers who can do that for us. So you have a plethora of different cards. Now we're obviously cards have transitioned a lot more, but it happens right here. But in any case, you would still know that this is the right card to use for this versus that. And all of that stuff, you know, if it's $50, $100, $200, $300, like that actually really pounds, whatever it is, really, really matters in the grand scheme of things. And so that is like not the traditional wealth tech, but that is about building more financial stability that can attribute to wealth growth as well. And a lot of the things that I've liked from the wealth tech side, and, you know, it's the democratization of investing, because if you're sitting here worried about paying your rent next month, your mind isn't thinking about long-term investments. That's just not part of what, because a lot of this is psychological. And so it's the idea of you can like $10 a month, you know, just to start and see. So, because that stuff, while, you know, people who live and breathe it every day have an opinion about it. We, Jane Barrett, Zach, I'm also thinking, because she also with her old startup did a lot with this, of course, like, it was surprising from all the data that she had, the number of people who were even working within financial services who did not understand that part of their their personal portfolio. So yeah, there's a lot of opportunity there.
I think
Yeah,
the one
and-
other
Oh, good.
the one other
Mickey.
piece I was just gonna say that even I think that side is really important and super interesting and probably morally really relevant too. But the thing about wealth tech too that we haven't even discussed, right, is by 2045, I think it's expected something like $4 trillion of value is gonna be inherited by millennials and the next generation, right? It's the biggest transfer of wealth in human history, right? Like for a long time, we've been in the space for a long time. The coverages between traditional investment platforms, right, like your BlackRocks, your Vanguards, and whether or not they will be able to capture the emerging population, right? The Gen Z, are they just going to go to Robin Hoods? Are they going to go into... And so I think that's the other piece that where wealth tech is going to become really, really front and center. Schroders, for instance, is one of the biggest traditional B2B investment asset managers in the world, right? They recently just announced that they're going to bring their whole wealth tech platform in-house, the building of that in-house, right? Because I think this transfer of value, especially, is going to mean more of the people who have the money that traditional wealth managers in particular are dependent on, are going to be younger, more tech native, they are going to be the Robin Hood generation. And so the Vanguards and the BlackRocks too are going to need to kind of start making those changes too, because that population is changing.
Yeah. Ian, did you have something you want to say on there?
Yeah,
And
a few
Cheryl?
things. Everyone made some really good points there. And Cheryl, I'll pass to you, I
I
promise.
think we got to start a wealth tech podcast, guys.
Yeah.
Apparently we had something here.
No, I had one 2 years ago and I miss it. Okay, just indulge me. A few things. Great wealth transfer. I was going to moan about where the money is, and then I remembered that I actually love my parents, so I can wait. On that one. But I think you're right. There will be changing behaviors for sure, and that could be interesting, even in terms of shareholder engagement and what people expect from their investments. Right, that could be massive. Scarlett made a point on financial inclusion. I actually think making things automatic is really, really important, because people don't understand what they have, what they're entitled to. I mean, on the benefit side of things, you look at, I'm being very UK centric today, so apologies. If you look at our social security net, there's actually a huge amount of money in unclaimed benefits that people are eligible for that they never receive. There is an opportunity there, probably on the government side, to make that more automatic and help people actually receive what they're entitled to, and then help them get that step up in life. And the last thing is, I also talked about the kind of institutional side of this. I think tokenization, not maybe for next year, but longer term, is really fascinating, because that's potentially an upgrade to the kind of asset rails. We talk about upgrading the payment rails and changing that. I think if you move assets into tokens, that could really be interesting and will generate a lot of opportunity. And the people we have coming to our show to talk about that, you've got people like Citibank joining people like Midnight, sprung from Cardano. You've got such an incredible kind of convergence from the DeFi and traditional finance space there. So lots going on, but I promise I should shut up now and let Cheryl talk.
I promise I should shut up.
He's not convinced.
You followed. I will shut up, okay? I will shut up.
Okay, it's okay. Well, actually, so this is to backtrack a little bit, and then we'll talk about tokenization to make Ian happy because, he doesn't want to shut up. But speaking, I was speaking to the CEO of a wealth tech platform in Indonesia, and to me was very shocking because sometimes I always forget that in Southeast Asia, 70% of the population is unbanked or underbanked. And when you juxtapose that against the number of people who have like investment platforms or accounts, there are actually more youth, especially in Indonesia, who actually have an investment platform or an investment account compared to a bank account. And how they do that is through like e-wallets and things like that. So I thought it was very fascinating. And coming from Singapore, obviously like a very privileged point of view, when you speak to people especially from Southeast Asia, who really need like inclusive fintech, and then you realize that, oh, this is how they're actually growing their money. And meanwhile, like Scarlett, you were talking about like stacking cards and things like that, basically how to adult. I don't know how to adult. I wish somebody could do that for me. And also to Ian, your point on tokenization, we are starting to see that also in Singapore, where you can, with tokenization, you could be an LP in BlackRock, for example. Like just a very small percentage, but me, an LP in BlackRock.
Can you spend a second, because Ian went a little bit into the UK and you specifically asked about the government. Can you try to explain it like we're five about, because speaking of governments helping with this, Singaporean government does a lot around this. Can you just talk about how, because like, can you just give us a short version of how for Singaporean residents and from a salary perspective that X amount of your salary has to go to the long term, but you get all these preferential terms for housing and da-da-da-da.
Oh, yes.
The government's helping build wealth for Singaporeans is a short answer.
So,
like, can you talk a bit about how?
Yeah, so the equivalent for US, I think it's your 401k, is it? Where a percentage of your salary goes to like compulsory savings account, which...
And that's the difference, though.
Not
compulsory is different. Yeah.
Compulsory.
Compulsory is different. Yeah.
It is compulsory. I think
There's no compulsion here.
Nah.
So every month there will be a chunk of your salary that you'll never see. It goes to this savings account, and the employer also has to match that amount of money. Yeah, and then you can only use that when you get like a subsidized housing in Singapore. So in Singapore, even though it's really small, it's tiny, but it has one of the highest percentage of home ownership, despite its tiny space. Or you can wait till you're like 60, 70 to hit retirement age, and then you withdraw all your savings.
And there's a lot. So exactly that. So the part that I wanted to get for you to say was a compulsory part, and that the employers have to match it because you're building a savings no matter what. And then obviously you mentioned real estate earlier, Ian, but one of the things that we know, I mean, it obviously has ebbs and flows, but real estate has historically been a good long-term investment. That by being a Singaporean resident, there's all of these things that you get where a lot of the percentage of the houses are subsidized and you get home ownership and you have to own it for a certain number of years, then you can actually sell it and make quite a large profit. So to your question or point of governments, Singapore is definitely one to look at of how they're trying to help build generational wealth for their citizens, which is super interesting.
It seems like everything that we're talking about here almost comes back to that blog post, and it was actually referred to, I think, as a blog post at the point that it was written, the self-driving money thing that Angela Strange wrote from A16Z. I think that was like 5 years ago, or maybe even longer now. Everything that you all have said sounds like, whether the government is pushing it or not, we're finally reaching a point where the technologies that exist in the world of fintech, exist in the world of insurance, are at a point where self-driving money actually could be a thing within the next couple of years or within the next whatever amount of time. So I want to be conscious of time at the same time, while I say time 14 times, and get to Cheryl's prediction and then kind of wrap things up there. So Cheryl, I want to read a little bit of what you actually wrote here. Everyone else's was kind of like 3 words, and then yours is fantastic. Well, it's not really, it's I appreciate the phrasing of a lot of it. So let me read it verbatim so I don't get it wrong. So we covered last year the golden era of VCs may be over. And to quote the one and only Cheryl Chen, "This year I stand shooketh," she says. Mainly, I just love Shooketh so much. From a rough 2024, and I still think the same. The cold didn't bother Elsa, and it's not going to bother good startups, especially ones who do AI more than just for AI's sake. Also, is funding winter going to be over soon? So it sounds like, one,
Did you write that on the plane to Japan, Cheryl? Because I feel like you were in your feelings when you wrote that.
It was the day before. The day before, I was
Okay.
like, oh my god, I need to come out with a prediction. I have nothing in my brain.
watching Frozen, thinking about fintech, just putting it all together in one. It feels, I mean, I want to make this, I mean, Cheryl, it sounds like kind of what you're driving towards is some good, the world is continuing to change as far as the funding ecosystem exists, right? Like we're talking about family offices, big banks are getting more involved. We're seeing big banks reopen fintech accelerators, which I think is a really interesting thing. Like, right, like there's a lot of really exciting things happening. So Cheryl, I want to throw it to you since it's your prediction first, but the reason I wanted to end on it is because it is, I think, in a hopeful direction for what yes, exactly. Give us a little bit more about like kind of why you think that, and then I want to kind of have closing thoughts from the rest of the group about what this year might have to hold in general.
Yeah, so when I was doing that, because I need my things to be backed by data points. If not, it just feels like proper fluff, right? So one of it is Asia recently experienced its lowest venture funding total in a decade, with investments plummeting to 13.2 billion, marking a 44 year-over-year decline. But that being said, again, we're seeing the surge in family office participation, growing market for PE, which now contributes to 15 to 25% of funds in the region. And also to Scarlett's previous point on how even family offices, they're starting to diversify, correct? And being more, lessening their risk appetite. Increasing their risk appetite, sorry, it's late. But we're starting to see a lot more of that. And that also coupled with a couple of big, extremely huge tech investments in the region, NVIDIA, Amazon, Google, Microsoft. But we're starting to see these investments in the huge data centers here, like generative AI is going to be our thing. More chips, more GPUs for everyone. Yes. And then pumping into investments, pumping into people for the region, and that coupled with everything else. I feel like I'm looking at the data points and also hoping that winter is over, because I don't know how much more of like this I can take. I need winter. I'm tired. I just want to lie down and sleep.
Just on that, there's one point, Mickey, you should definitely talk about the AI report. But on that point of the big tech companies, it was interesting because we think about a lot of times the products and how it's like impacting end users. But one of the things that came out of Vegas, so Google Cloud announced a big partnership with Citi around basically enhancing, elevating the tech stack. But one of the main use cases that the big tech guy, Balaji from Citi, was speaking about on the stage was the people side and how they were utilizing these like enhancements and upgrades to actually enhance and upskill their team, and how this is going to make their team better. Because I think it's so easy. We always go to like the solutions, and then and for those of us who worked in large corporates, especially on the digital and innovation side, like a lot of the resistance is around like psychological safety for your job. But what Citi was really focusing on was how it was actually helping their employees. But Mickey, we can't not go through all this, especially with all the sleepless nights that you had and the points that Cheryl made, and not talk about the AI report. Can you tell us a little bit?
Of course. For anyone who doesn't know, which I think is no one, the AI report is our inaugural adoption index. Looking at so let me take a step back, right? November 2022, ChatGPT launches. And then since then, there's been so much activity, right? And there's been so much investment. And what does it all mean? I think to the point around the funding winter, I actually am not sure that I so much worry about the funding winter in general over the last few years. One of the reasons is because of AI. So this is why we did this report, right? We wanted to see what all of this activity meant. So we looked at what financial service firms around the world were doing since January 2023 up to the middle of October 2024. So almost 2-year period. And in that period, we found 221 of the biggest financial service companies in the world had launched between them 376 AI initiatives in that time. So that's more than one each, right? And then more than half of those initiatives were Gen AI initiatives. So, Ian, earlier on, you made the point around we want banks to move faster. I think banks are moving at an incredible pace, right? And I think part of the thing is to kind of, this is to loop my thinking around this. Zach, you and I have talked over the past year and 2 years about whether or not fintech is the right term for this industry we're operating in. And I think that's a super pertinent question as we go forward, right? Like if we look at the conversations we've had today, talked about wealth tech, we've talked about banking, we've talked about payments, we've talked about regions, we've talked about individual consumers, business. Financial services is huge, right? Fintech has been an incredible kind of medium for actually making financial services way bigger and way smaller at the same time. It kind of created that connective tissue. But now I feel like actually what we're seeing is broadening and there isn't one conversation and one narrative, right? And so that's why I don't like this year in Vegas, my personal experience was that the world hasn't changed that much from the funding side. If you look at it, funding is not up that much from 23. The energy was different though. The energy was incomparable. Like AI is making leaps and bounds, but like there isn't a huge thing that we can, it's all excitement, but you can sense it. And I think really what that reflects is that the industry has kind of gone past it, but like, like we're at a new age of growth for it. We're at the new kind of cycle of growth. We've kind of built the foundation, and with new technologies like AI, with like global movements like open banking and embedded finance, coupled with the fact that like we have a huge change in population, a younger, tech smart, the world is both more connected and divided than ever. I think like the world it's not about funding winters and all of this. It's just about new opportunities and new realities. I'll stop my preaching there.
And not for nothing, we co-authored the report with A Crew Capital, which is a venture fund who just raised 800 plus million. So there's definitely some cash still flowing around there, because that's not a insignificant amount of money. So that was another piece.
So I have a closing. I noticed I have not provided any predictions at all, but Ian. Well, I wanted. I wasn't gonna skate away. Ian, any closing thoughts from you?
I mean, on that, I mean, what Mickey said was great. I think AI is a kind of software update for fintech, and I think the other point that you make, which is fintech is everywhere now, is such a massive point to make. I think there's so much opportunity out there, and I think that's why the mood in the room has changed. Fintech via embedded finance and other avenues is bleeding into everything. And I think people are being more agile about how they work. They're thinking more about ecosystem. They're thinking more about partnerships than they were previously. So the lack of buyouts, the lack of IPOs doesn't necessarily mean a lack of activity. I think there's tons going on. So I think one way of looking at fintech, I mean, I saw a presentation years ago from the chief strategy officer at Lego, of all companies. And when he came in, the one thing that he pointed out was that his main rival wasn't the other building block companies. It was Apple. And as we know, and it was other giants like that. And as we know, Lego is now a massive brand and does everything. I think fintech can learn from that mindset. Whatever industry you're in, look to grow what you do. It's the pie, we don't talk about slices of the pie anymore. The pie is huge right now. So yeah, if I would leave you with anything, it's pie.
I love that. So I guess to close, Ian, Mickey, you pointed this out before, and it kind of relates to something you just said, Ian. But my prediction from last year was that 2024 will be the last year we use the word fintech ubiquitously. Let me say ubiquitously, just because I wasn't trying to say it's the last year we actually use the word. And then the era of digital financial services is nearing as fintech grows into adulthood. So I would say that I'm kind of the opposite of Cheryl in terms of the need for that data. Like, yeah, I want the data, but that's why I get to work with wonderful people like Cheryl and Mickey and Ian and all you that bring the data to bear. To me, it is a vibe thing. And I think fintech is very much growing up, right? Like looking at the companies that are the early stage startups that are partnering with big banks, like all that kind of thing. And is fintech the right word? I don't know, but I don't think that's really the point of the conversation right now. I think the vibe of the show this year in Vegas was, and it was recent enough that I think it shows something important, but also the number of conversations I've had with startups since then, the conversations I've had with VCs since then. Every off the record conversation that I have with anyone of, I mean, not even of note, just there is a palpable something about to happen here. And that's like that, you know, this incredibly well phrased prediction for 2025 is there's a palpable something about to happen here. But it's true. There really, there's that I said during the Sunday Night Live monologue during Money 2020 USA, the sun is coming up and we are on the verge of a fintech spring. And I believe that in IPOs. I believe that in embedded finance. I think we're finally going to have some regulatory clarity in some places. And then I think have maybe potentially a lot of policy questions in some other places. All of that said, though, where we started is who the F knows. And the reason that, as I started and stated in the beginning, that I said that in the first place is that we all have opinions. Everything here that we've talked about has been interesting, fascinating, and I don't think any of us, disagree with it, and a lot of it's data backed. But who the F knows? We're living in the absolutely most mind-bending and fascinating time that has ever existed in the world. I can't remember who said it, but somebody was pointing out that we're basically due for another crisis here at some point soon. We have a very interesting political time ahead of us in the US and across the entire globe. Like, who the F knows, I think, is the punchline. But there's a lot of really, really fun nuance to watch unfold inside of that. So I think on that note, thank you all. We will do regular check-ins on this as everything is fintech continues to go and run and exist. Cheryl, appreciate you staying up late. Mickey, Scarlett, thanks for getting up early with me. And Ian, appreciate you not taking a midday nap.
Thank you.
All right. Thanks, team. That's everything is fintech. We'll be back soon.